Hey, what is up, everybody? How's it going? Welcome to our weekly futures trading show. This is Futures Trading with NinjaTrader. I'm Spencer Israel. I have Jim Cagnina here from NinjaTrader. We're going to spend the next half hour talking about what is going on in oil and Bitcoin today. Have you seen those markets? We're about to break it down for you. Let's go. Smash that like button. Here we go. Jim Cagnina, welcome to the jungle. How was your weekend?
Pretty awesome. Pretty awesome. How about you?
It was okay. It was okay. Markets are certainly not quiet today. Seems like a lot of news flow, not so much markets news flow, but just like other news flow over the weekend. But markets are decidedly not quiet here today, Jim. We should probably start with like the overall market, but I do want to focus a lot on what is happening in crypto and oil today. But bring up the S&P futures for us if you can, and we'll start there.
Very awesome. Yeah, I mean, this is the picture. It's been crazy amount of buying. I mean, if you look at this chart, from our lows to our highs, we've already retraced back upward to the 61.8% level, 45.30. It is nonstop buying coming in here. Today's, we'll see what happens. It's kind of slowing down today, but man, oh man, don't get on the short side of this thing just yet.
Yeah, it is remarkable. We've now had 2 weeks in a row, Jim, of just pretty relentless buying action across the board in stocks, in U.S. stocks specifically, whether it's the S&Ps or you can go to the NASDAQ or frankly even the Russell. It's pretty remarkable. What do you make of that?
It's a lot of times you just have to sit back on your heels and say, listen, what's the candle structure telling us? They're buyers coming in. Intuitively, this shouldn't be the case, right? We have crazy inflation. We've got several rate hikes coming up. We have a war going on. We have supply chain constraints. We have China on lockdown, a lot of negative stuff. The flip side of that, I think, is investment money has to go somewhere, right? It has to go somewhere. Your bank account's not cutting it. Interest, still the Treasury market's not cutting it. You're getting negative yields. And so folks are looking, I think, for opportunities, for dips, for reallocating portfolios. I got to think that's what's going on here.
All right. And the same can be said for the other indexes as well.
Yeah, let's just go through real fast. This is the daily chart again of the NASDAQ. The NASDAQ's only retraced 50%, so it's a little bit weaker than the S&P, but still nonstop buying, and ever since March 15th. And when you look at this and you're like, wow, this is just, we're in a bull market now. I mean, short term, but that's kind of looking at the chart, what I'm thinking. Russell is the weakest. The Russell 2000 is the weakest of the four major benchmark stock index futures we look at, not even to the 38.2%. And I have a rectangle, an area resistance that's been a long time area resistance going on since last year or early in the year. It can't get effort over that. So that's the weakest one. And then the Dow is pretty strong too. We're between the 50 and 61.8% retracement. Yeah. It's awesome.
So it stands to reason then bullish until proven otherwise. Or if you can maybe go back to that last chart there that showed the resistance box, and that was the NASDAQ.
This is Russell right here. Yeah.
Oh, sorry, the Russell. So bearish so that's resistance until it's not, right?
Yeah, I think so. And you could see here what I did to identify this area, and this is just my visual trick, is I aligned the bottom of my rectangle with the highest part of a body of a candle, right? And then I forget about the wicks. The wicks kind of shoot in there every once in a while. But if you can't close in that rectangle, we've tried 1, 2, 3, 4, 5, 6 times at least, then it doesn't count. So yeah, I mean, a lot of folks are going to say, hey, I'm going to be sellers when it gets up here because I don't think it can close up here.
Yeah.
Alternatively, the breakout buyers are going to be like, man, we get over at 38.2%. I'm going to buy in a breakout.
Yep.
So that's kind of it's pretty conspicuous to me what's going on here. It's a little bit weaker, and it's going to be a small cap U.S. based. I mean, they are more sensitive to interest rate and borrowing concerns than anybody else.
Yeah. Morton, or no, who was in the chat? Robert just asked about it, whether there was any news that just came out, because the SPY just dropped a little bit. The S&P futures just kind of dropped a little bit there in the past couple of minutes. I'm going to go ahead and assume that this move is related to some numbers coming out of the White House with regards to the budget deficit, or the budget for and the U.S. deficit for this year and next. So that's what I'm going to assume these moves are about right now. Biden just issued a statement on the budgets for this year and next. So I'm going to go ahead and just extrapolate that and take it to mean the market is digesting that news. Let's go to oil, though, Jim.
Yes, sir.
Crude
oil.
Is kind of the story of the day here. Is oil is just getting shellacked. Is this good news for you and me and everyone else who's trying to pump gas?
Shellacked is the best technical term. Yeah. I agree. I concur with that. Yeah, I mean, it's obviously, I think, crude oil is the product, right? And then it's refined into a bunch of different things, through this distillation process, and gasoline's, one we use, jet fuel's one we use, a bunch of other stuff. And so, yeah, it's good news from a travel point of view. We still have a long way to go, though. We're over $105 still on crude oil. But look at this candle today. This candle, high to low, I'm just going to show you high to low. High was 112.93, low 104.50. What is that? That's $8.43. That's a big range, and it's on the downside. There's not a lot of wick at the bottom here. There's still no buyers right now. This is looking even more negative. It's fascinating.
Yeah. Any idea? I mean, I know that OPEC Plus has a meeting this week. I think that's on Thursday, though. Any idea as to what is behind this move today, or does this look technical to you?
Yeah, I mean, from what I've read so far this morning, it seems to be China is shutting down again because of new COVID issues, and they are a huge importer of crude oil. So with less demand, it's a supply and demand market, right? So with less demand, it's causing this reaction in the futures markets, and I think there could be something to that, because this is a unique move down. Even though you could argue, well, last couple of days was trending down with the lows of those wicks, but we'll find out more as the day progresses if this idea is right or not. But that seems to be what's going on. OPEC already pretty much said, hey, we're going to stick to our plan in May. We're not going to do anything different. So I don't think that's it.
Okay. All right. So crude making a big move down. Are there other energy markets making similar moves? Do we want to look at like natty gas, or other?
Yeah, for sure. So let's toggle over to the gasoline futures, the RBOB. It's called the RBOB gasoline futures, traded in the CME Globex through their NYMEX exchange. Same exact. This is systematic pricing, right? It's just mirroring crude oil. We have this big red candle. This is a good thing for the commuters of the world who have to drive. Yep. And if you want to go on vacation, this is a good thing. We have a long way to go before anyone's really happy about it at the pump, but this is a step in the right direction. It's just correlated with the crude oil prices.
Okay. All right. So this market is moving down.
Yeah.
Another market moving up today, big time. And that market is crypto. If you bought Bitcoin on like January 1st, congratulations, you're up now. three months later.
Good things require patience.
Yeah, that's it. Hey, I bought Bitcoin this year. I'm talking to myself, right? So again, Bitcoin breaking. It's not just Bitcoin, actually. All of crypto, Ethereum, all the futures are just breaking out here today. I'm wondering if you've thought about perhaps why this is happening, because I have some ideas, but I'd be curious to get your take as well.
Yeah, I'm interested in your ideas too. The obvious thing that hit the headlines was, Russia's still demanding that their crude oil be paid in rubles instead of, US dollar or won or euro or anything else. And it seems to be, and everybody else is saying, no, we're not going to do that. Germany's saying, no, we're not going to do that. But then Russia comes back and says, yes, you're going to do it if you want it. And that's one trigger, I think, that could speak to this gap up that we're seeing right here.
Okay. My thought is that Bitcoin is crypto at large is a growth asset, and we just had 2 weeks of pretty substantial rally across the board, and now everyone is chasing growth because you can look at growth stocks and Diamond Tech is up today. Kathy Wood is up today. She kind of the ARK funds blasted off at the open there. So I'm kind of thinking that this is just people trying to BTFD, trying to buy growth because they have FOMO. That's sort of what I'm thinking here.
Yeah, that could explain it as well. That for sure could explain it. I mean, this is 47,965 on the futures, and there's no wick on the top, which means buyers have complete control today.
Yeah.
And that could definitely explain it as well. The other thing that I think is good, even though someone might throw a tomato at me, is the more that the fiat currency countries say, hey, okay, Bitcoin's okay, or cybers are okay, but let's kind of regulate it, provide a structure around it. That also could kind of pump up the growth potential of it as an asset.
Yeah, potentially. Do you have any thoughts on how to trade this today? Any levels you're watching, or?
Well, right now, I mean, no, I mean, this gap kind of threw me off, and you get a lot of this theory, this idea that gaps get filled all the time. And this is the futures market; it's a little thinner these days still. I don't necessarily buy these gaps always get filled, right? So, or maybe they will get filled in like 3 months. So again, I'd be waiting for some sort of little bit. I put a Fibonacci retracement on here, look for some kind of pullback, and then try to get in. I think it's looking that strong.
Okay, interesting. Yeah, that's it. Hex. I'm buying 500 Bitcoin at a time. I'm the whale. Are there other? Do you want to look at ETH or other markets here? Because we still have to run through. I mean, we haven't even talked about treasuries at all. We have
so
any commodities besides oil.
So dollar index here. This is all right. So this is pretty much the U.S. dollar versus a basket of other fiat sovereign currencies. And you see another big gap up here. So this is interesting because this corresponded with the same big gap up that we saw actually in Bitcoin. So correlation's kicking in here. And, I have a little quote down here, what I read from Abramowitz, I think, this morning from Bloomberg, saying, hey, dollar surged to the strongest since 2015 versus the yen after the Bank of Japan pledged to buy, and I quote, an unlimited amount of 10-year bonds, U.S. treasuries. Now, all right, unlimited, that's a little crazy, right? That's not true. But if they made a commitment to do that, then that's going to cause this kind of behavior as well. So that's another thing that I'm thinking in the back of my head. Hey, let's do some more research, see if this is accurate. And if it is, that could certainly explain that big gap up in the dollar index and maybe even partially explain the Bitcoin.
Yep. There is also another bond inversion, a bond yield inversion. So that could, and we can talk about that in a second, but that could also be creating some sort of hesitancy, and making people want to fly into quote unquote safer assets.
Yeah.
Yeah,
for sure. And I'll pull up the CME Group futures. CME Group has a really good futures yield curve on their webpage. Let me just pull this up for you really quickly so we can talk about what inversion is, because it could be kind of confusing. So this is the futures yield, and remember, everybody, yield's inversely related to price, right? And what they do is they just track the smaller maturity, the 2-year, the 3-year, 5-year, all the way to the true 30-year treasury bond. And you can see it starts off going in the right direction, and then yield crashes all the way down to the traditional T-bond, treasury bond. Here, this is the inversion part. This should be going the opposite in a normal market, and it's not. It's doing exactly the opposite of what it should be, hence the word inversion. And then when you go out to the far end of the curve, it's still kind of messed up. This should be sloping up, and it's not. So this is a really nice place to look at Treasury yields as they move in real time.
Okay. So, and again, that's a really good tool. That's on the CME's website. You can just what do you Google to get that? You can
just CME Group yield curve.
That's it.
CME Group yield curve. You'll find a link to it. It's their Treasury Analytics page. And then you'll have a whole bunch of options on how to kind of do some homework on it. Super cool website. But actually, before we go to the 30-year bonds, if we could just really shoot over to the Russian ruble now.
I forgot all about how's our ruble doing today. Man, we should have just bought that dip. Man, why didn't we do that?
Because we thought it was going to zero, right? We thought, at least I did. I'm like, wow, when we got down here to what is this, March 7th, ceasefire is nowhere on the horizon. Sanctions were nothing but popping up like, pop-up windows. And once you get a virus on your computer, they're just popping up everywhere. And but that didn't happen. It didn't. We found a low. The traders found a low, and then we retraced all the way back up to the 61.8 point retracement, which is here. So I have a mixed feeling about it. My feeling is part of this might have to do with, hey, if we want to buy Russian resources, we have to pay in ruble as part of it. But I also think this might be telling us that there's more, that the uncertainty associated with this war conflict that we saw here on March 7th we have less uncertainty now. We have less uncertainty, even though it's horrible and we want it to end. We're praying for a ceasefire. Maybe there's a little bit less uncertainty in the marketplace in general. Those two things I think are something to think about.
All right. Yeah. I mean, it's easy to say in hindsight, obviously, but you also have to, if you're going to buy this, understand really which side you're buying here, and probably not the side most people want to buy anyway. Okay, but let's move the futures out, the ruble off there, and let's go over to some Treasury yields. Let's start maybe with the 30-year.
Yeah, we're going to do the 30-year. Let me find it on the bottom here. There we go. Here's the 30-year U.S. Treasury bond. My favorite. I started in the 30-year U.S. Treasury bond pit at the Chicago Board of Trade in the early 80s, like really early 80s, by the way. I'm not to date myself, but this is they've been issuing 30-year Treasury bonds for a long time now.
Yeah.
And the trend is bearish, right? And that makes sense given the status of these interest rate hikes that are coming up. And the fact that there's big inflation, nobody wants to be locked into a 30-year Treasury bond. So we saw this price depreciation. The idea that there was this kind of flight to quality didn't last very long, and then we're kind of driving down toward the bottom here. So my personal opinion is we have a 148 handle right now. I think we're going to be 47 handles, 46 handles, 45 handles. Over in the near future. I think that's my opinion. I could be wrong, but even today's bump up on this news, with the Bank of Japan, it really just created an inside bar for the body. Just forget about the wicks, but the body's an inside body, and that's I'm not worried about it.
I like that you have the FOMC meetings labeled on there, because we're going to have our next meeting is not until May 4th. I think May 4th is our next Fed meeting. So
here's the interesting thing though too. A lot of times the day of the meeting, not that much happens in the bonds.
Yeah.
But then after, I have more Powell on here, right? Remember that thing, more cowbell, Saturday Night Live, more cowbell.
Oh, for sure.
So we have more Powell, and so it's the interpretation of the meeting that triggers stuff. So you have the press conference at 2:30. Okay, he's got a script he reads and answers questions and kind of ducks, gets out of the way if someone throws an egg at him. But then the follow-up meetings, boom, this was a follow-up meeting and it triggered this big move down. So that was very interesting to me, I think.
Yeah. All right, we'll have to keep this one on our radar here, because I mean, if the yield curves are going to stay inverted here, then that would theoretically mean some more crazy things here for bonds. What's gold? I haven't even really paid attention to gold here today. What is gold doing? Is it right now?
Yeah. So we had a pretty big price appreciation, right? This is risk off. risk off, it really kind of hit the gold market. People were buying gold. They were freaked out with the war. Then, cooler heads prevailed, and we kind of had a retracement back down into this channel that I drew. Real rough channel. It's crooked even. I didn't even make a parallel. But we're kind of sideways consolidating. We bumped back out of it, and now we're kind of back into the sideways channel, around 1940 to 1920. I think that's gold's, happy spot right now. And then eventually, I think we'll break down into the 1800s once, like I said, we're praying for a ceasefire once that process starts happening.
Interesting. Well, if you think we're going to break down back to the 1800s once, if and when this war ends, which, as you said, hopefully it ends today, I'm surprised, and maybe because I don't look at a daily chart of gold enough. I'm just surprised that it really hasn't, outside of that one spike it had, it really hasn't performed as a safety asset. I guess it has. I guess it's gone up in the last. It had a really nice run in from late January to early March, but it's come off since we've come off those highs there, Jim. I guess I would have thought that gold would have. I get that it topped out like that, but I would have thought that it would have sustained itself more up to those highs. But I guess that one high was that one run to 2078 was just too much, too fast. I don't know.
Yeah, no, I'm surprised by it too, Spencer. You're not alone, for sure. But historically, gold's always had a hard time getting to 2000. I don't know if it's psychological or what, or staying over 2000 for very long. It's always had that trouble, and it hasn't been an asset that, like, all right, we're at 2000, and next year will be at 2100, next year will be at 2200. It's not the same as the equity market, which is deliberately constructed in a way that it should always appreciate. This is a little different.
Yeah.
All
right. Reminder, guys, this is our futures show. This is futures trading with NinjaTrader. If you have any questions for Jim Cagnina about futures, about how they work, how you can trade them, now is your chance. We got about 8 minutes left in the show. Jim, do you want to go over your tip of the week here?
I do want to go over it for sure.
All right, let's go over that guy right now. What do we got here?
All right, so I'm gonna explain this a little bit with the chart itself. So we have a weekly report by the CFTC called the Commitment of Traders Report, right? It's mandatory that the bigger institutional positions are reported once a week for each asset class, and then the CFTC publishes this on a Friday, and it's based on Tuesday's data, right? So the clearing firms, the FCMs, the big traders get their information to the CFTC. They compile the report and they publish it on Friday and afternoon. So there's several categories. One of them is called non-commercial net longs. And what a non-commercial is, it's just simply an investor, right? Maybe a fund, maybe a hedge fund, maybe a family private office. The opposite of hedgers, right? These are folks that are investing in a particular commodity. Speculators, big speculators that think that the net longs think the market's going to go up, right? They're long in this position. And so, but the S&P 500 commitment of traders trend is down. And let me show you what I mean by that. So I have it plotted here at this middle panel here. This is the S&P chart on the top, daily chart. And remember, this is a weekly data, right? So you get 5 dashes a week at the same price. And when I put my crosshairs over it, it says, hey, there's 102,000 net long positions. In other words, 102,000 more positions that are long than short, that are holding positions for a long period of time. And when we start all the way back here 4 weeks ago, we were at 234,000, right? In the trend, and then the next week we kind of fell down to 160,000. The next week we kind of fell down to 125,000, and then on Friday we fell down to 105,000. This means the institutional investors are maintaining smaller and smaller net long positions. Now, you would expect, because it's a week delayed data, it's kind of hard to guess what's going to happen next week, but you could kind of see it reflected a little bit. We're slowing down a little bit here in the last 5 days or so with respect to this big rally coming up. Even the bars are a little smaller. But this is good information. You can get the Commitment to Traders report right on the NinjaTrader platform, and you could look at it for any different type of market there is in futures.
I have to admit, I had not heard of this report before. Where on the platform can you find this?
Yeah. So you right click here, you go to the indicator section, and that'll open up kind of the new dialog box. And then I've already added, it's just COT, Commitment to Traders. It's uniquely a futures thing. Mandatory reporting. And you can see up here, you have several categories. You have non-commercial, that's what I'm talking about, right? You have futures commercial. This is the hedgers, right? So people who are hedging exposure to their cash portfolios, right? And then
and the reason we want to like separate that out is because it's those positions, like what they say, what they mean. I guess they mean different things, right? Like why they're on for different reasons. So you can't assume.
Yes, right, and they're on because they want to protect their the liquidating value of their asset.
Yeah.
In times when cyclically they feel the market's going to go against them, right? And so by putting on that hedge, then you could go ahead and turn it off later, and then you lock in some profit on the hedge, but you lost some money on your original cash position.
Right.
But it's kind of a net push, right? So this is really what the futures markets were originally designed to do.
Right. Okay. So wait, can you go back to the actual chart and then tell us what this is telling us right now?
This is telling us that institutions for the last 4 weeks have been reducing their long positions in the S&P 500 E-mini stock index future.
Oh boy. They've been selling in part into this rally.
Yes.
They've been using the rally to lighten up.
Yeah, but remember, this is all right. So this was from Friday, right? So this is 5 days old, the data. So Friday's data, which let's say Monday, right? So Friday's data is really from Tuesday. So it's for instance, it should match up right here to this particular level. So it's it's delayed, but institutions move slower than me and you, right? And we're in, we're out, we're ready to go. But adjusting portfolios and doing all this stuff takes effort and time, especially if you're really, really big, which these investors are really big.
Yep. It takes them more than sometimes more than a day or even several to work out of the position if it's big enough. All right, that's a really good tip, Jim. Thanks for that. And again, guys, to learn more about futures trading, to learn more about NinjaTrader itself, there are several links that are both in the description and also I've been putting them on the screen. NinjaTrader.com/futures, NinjaTrader.com/get started. Jim is doing his webinars every single week. If you go to NinjaTrader.com/events, you will get Jim's webinars there for free. Jim, anything else we need to know about for this week?
No, I just want to emphasize the events. The events page every morning at 9 a.m. we go in and we look for trade ideas and we talk about what's going on in the marketplace. Every afternoon, 3:15, same thing. We look at the close, and we have participants, ranging from brand new to kind of experienced, and it's a really great community. It's free. It's through the YouTube channel, so I invite everybody to check it out.
Awesome. All right, Jim, we're going to be taking a 2-week break. We're off. You and I are not doing a show next Monday. We will be back 2 Mondays from now with a lot to discuss. Again, just still watching oil. Oil has bounced here. I don't know if you noticed that in the last few minutes here, Jim. Our second real bounce of the day, just kind of happening as you and I were talking. Now,
yeah, I'm gonna pull it up right now.
Just noticing.
Yeah, there we go. 106. We're up. Yeah, for sure. There's the candle, baby. Right at that 61.8. We'll see if we close below it. A lot of time I use that 61.8% to say, hey, if we have a candle close below it, then maybe the trend is reversing. Maybe it's no longer a bull market.
Yeah. No, maybe. All right. Jim Cagnina is the senior education and training specialist for the NinjaTrader platform. He joins us every single Monday on our channel for this show. Jim, have a great rest of your week. We'll talk to you again in a couple weeks, and stay green out there, man.
Yeah, you too. Thanks, Spencer. Look forward to seeing you in a couple weeks. Be good.
All right, guys, I'm going to hop off, head on over to our next show, Benzing Alive, myself and Aaron Bree. See you guys over there. Smash the like button, please. Thank you. And that's it.